Hello, everyone. Thank you so much for joining the On the Mark Financial Forum and podcast. My guest today is the one and only Jaime Roberts. Jaime, thank you so much for joining us.
Happy to be here. Thank you for having me.
Of course, of course. I'd love for the audience to get to know a little bit more about you and the organization that you work for. So, why don't you take it away and introduce yourself?
Sure. Well, good morning, everyone. I am Jaime Roberts. I'm the CEO of Arizona LeadingAge. We are an association primarily of mission-based organizations that offer services to the entire continuum of the aging community, all the way from independent to hospice care and services. So um, our membership is really focused on making sure the needs of the entire older adult community are met. And we do that through advocacy and education and connecting to important people like Mark and making sure that we are able to find resources for people and help them along the way. In addition to LeadingAge, I'm also the creator of something called the Help Project, which helps individual families kind of navigate the same solutions that Mark has to offer along the way as well. So happy to be
That's
here. Thanks for
great.
having me.
Well, you're a great advocate for seniors in so many ways, and in both of your roles. So we appreciate all you do. So Jamie, I want to talk a little bit about some of the trends that we're seeing. The population that's aging now is kind of unique. It come from somewhat of a depression era mentality, a do-it-yourself type of mentality, and sometimes that leads to situations where they might not be so financially prepared for what's about to come, and the cost of care is getting higher, and all these challenges. But I'd love to hear what your thoughts are on the common threads of the people who are aging now, the baby boomers who are, the silver tsunami, as they say, is a real thing. But some of the challenges that community typically has when it comes to being able to pay for care specifically.
Sure. Well, I think often one of the most common emotions that people have, I don't know, not an emotion, but an experience is surprise by how expensive they believe things are and how they don't know how they're going to cover it, and they're always shocked that this is what it costs.
Right.
And they tend to like also not plan for it or think about it as a real reality. And so when the situation occurs, whatever it is, there is there's a sense of crisis, and they families kind of don't really know what to do or how to pay for it. And I'll say that probably post COVID, we've seen much more anxiety about the cost of care and services as people need them along the way. There are a variety of different living settings that are available to people and at a variety of different price points. But at the end of the day, a lot of people prefer to live at home
Hmm.
and they would like to know the best way to finance that. But, with the caregiving shortages and the fact that when people are living at home, managing a household care model is a lot of work as well for family members when that comes to, if it comes to that. And so being able to finance it even inside a community of sorts, whether that's a life plan community, an assisted living community, memory support, skilled nursing, all of those require specific financing structures, and you need to understand what is paid for by maybe an insurance product or what you would pay for privately or family pay along the way. And I think when people recognize what that costs and how to manage that, they become pretty anxious of how
Right.
they're going to afford it. Which is why what you do uh, is is such a creative solution for family members, primarily because a lot of this generation that we're seeing right now, they didn't grow up with financial planners, or that wasn't the way that they planned out their life. I mean, they maybe put some money away in their 401k, or they it's their house that they own, but they weren't savvy investors like we're seeing in this next generation. And so oftentimes it feels very overwhelming for them to even consider what these other options are. And so when financing a care need, that idea, that stress actually causes more stress for them, which also um, actually, it makes it causes the decline to happen a little bit faster because of all the anxiety that's around the money issue.
Yeah, it's definitely a stressful process. I mean, we walk people through it so many times, and And we did a podcast one time about the emotional side of money, and it really that plays out, especially with seniors. And as they're going through this big transition in their lives in general, where they're maybe moving from a home that they've lived in for 30, 40 years, maybe home care isn't for them or they can't afford it, because that tends to be one of the most expensive, is the 24-hour care at home. Obviously, you need like one-on-one services there as opposed to other, types of assisted living where, it's more of a group setting. But it can be really overwhelming to make that type of transition and then also potentially try to sell your home at the same moment so that you can pay for it. And we often find also that because they're from the generation of kind of do it yourself, bootstraps type of mentality. Like you said, they don't have that financial advice. And it's not just financial advice, it's also the tax advice is really critical. And we talk about this a lot on the podcast about the step up in basis, where if a senior sells their home, let's say they've owned the home for 30, 40 years, which is also a common thread, very, very common for seniors in this generation to have lived in the same home. Maybe their first home they ever bought is still their home, 50 years later. I don't think that happens quite as much with the newer generation where people tend to move a lot more often, don't get quite as emotionally attached to real estate. But it's just a really hard transition. But I think also people look at, when they're in these situations, where do I get money to pay for this, right? We know we need the care. We know it's going to be really expensive. And the longer you need it, obviously, the more money you're going to need to pay for it. And that's where the home financing comes into play. And the interesting thing we always notice is that when people look at what resources they have to pay for things, they look at, investment accounts, maybe IRAs, maybe stocks, bonds, whatever they've set aside, maybe cash reserve. And they look at that very differently than they look at using their own home, which is also just another form of investment. As a means for paying for care. They have like this sort of mental block against using that because they want to pass it on to their heirs, or they want to, do something, to extend their legacy through the home as opposed to their investments. So they don't necessarily look at the two the same, even though they're two different types of assets. So it's really interesting to see the emotional side of this and, try to navigate families, especially the adult children, which are often the people that we're talking to. I'm sure you've dealt with this a million times. Sometimes the adult children can be very helpful and sometimes very difficult to navigate. What's your experience been on that end?
Both, for sure. But I would definitely say that there is, they're almost flabbergasted. I mean, I get that kind of sense from a lot of the adult children because they just nobody. First of all, nobody talks about this. So, they might say, sign up for your 401k or start saving for your retirement, and those are kind of easy button words that people use. But at the end of the day, when I meet with families, and I mean, they're educated, they're wealthy, they have resources. I mean, these people are very engaged in life. I mean, it's not like they're cut off and they don't know things. And they're absolutely surprised by the fact that how you pay for services is really on your own. I mean, if you can't fund it yourself, then you are looking at doing a potential spend down to go on public aid or Medicaid or whatever it's called in your state. And it's incredibly emotional for the adult children, and they sometimes they feel angry about it because now they have to find a solution for their parents, and they're not able, with all the other feelings that they have, they're also not able sometimes to figure out a solution that is in everyone's best interest. So being able to talk to families about that ahead of time is obviously ideal, but um, usually it happens when there's a crisis that occurs, and the adult children are um, also probably not that well versed in mom and dad's finances. We see that a lot too. That they maybe kept that private. It was more private. It was a different time. You don't share that information a lot of the times until there's a crisis, and so we have a lot of the adult children kind of coming in blind, wanting to make sense of everything
Yeah.
and to figure out how they're going to make the next move.
Yeah, it's funny you should say that because I just went through this exercise with my family just to be prepared in advance. Fortunately, we're not in a situation where they can't live at home or anything like that. But, they're in their late 70s and we just needed to get organized because they also come from that same generation where one of the spouses handles the money,
Yeah,
and the other one doesn't know where the accounts are, how to access them. They don't know how to pay the bills. They don't know, which accounts are used to pay each bill, if the real estate taxes are paid. All these types of things are left to one person,
yeah,
usually in many cases. And if that person isn't in capacity to do those things, and you haven't been prepared in some way, you can really get in a bind. I had a close friend also whose mother-in-law had a stroke, and they basically just had to wait for mail to arrive to slowly but surely, like a detective, piece together where there were accounts, how much was in the accounts, was it enough to pay for care? They had no idea. And it was just like figure it out as things started to arrive and as bills started to show up with collection notices that hadn't been paid, but they didn't know what bills needed to be paid. So it's
yeah,
really, really tricky. And I definitely recommend the exercise that we did with my family is basically just put all the accounts, all the expenses, everything into one spreadsheet, all the names of if they have a financial advisor, the CPA, anybody, life insurance, policies, all this type of stuff, just get it on paper so
yep,
that at least you know what's going on. But it does require the seniors to be open about these things and be willing to share them with the purpose of trying to get more organized and be able to in a crisis mode be able to figure out how to handle the family affairs, so to speak. So
absolutely. And it also just kind of a word to the wise, like pro tip, if you will, for people in our generation is you start that now. I mean, have somebody for yourself knowing those things because um, I I I mean, and I share that because I have worked with families where they think that they might have gotten everything, but there might have already been brain change that occurred right in the process, and so they thought they had everything, like and when it came time to access the life insurance policy that they thought that they had the information on, lo and behold, their dad actually forgot to pay that because he already had some early onset dementia. And that policy was, the family had thought that it was part of this collective group of information that they had that they were planning for. And at the time when they needed it, the policy was gone because it wasn't paid for. So I
I
think,
know.
yeah. And so and that actually sadly happens a lot. I mean, families think that they're prepared and then the surprise comes around. So the earlier and the sooner that you do those things and plan ahead for it is critical because you just, we don't realize what we accumulate over our life and like the different safety nets that you think you put into place. And I think that's more true for maybe our generation than maybe some of the generation that we're dealing with now because they just didn't know about the different options available to them. But
Mhm.
it is really important to have an inventory of what you have from an insurance perspective, from the accounting perspective, because those benefits that you forget that you paid for, they're not top of mind. So
Right.
it is important to do that activity early and
Yeah.
often, as
Yeah.
just like you will.
Update it.
Yeah, yeah,
Yeah, it can't be just a one-time thing because if your family member lives another 10 years, a lot of things change. And you made a
yeah,
really good point about the life insurance because I'm sure a life insurance carrier would love to not continue that policy as you're in your 80s and beyond. They would love for you to cancel the policy at that point because you paid all the premiums up to that date and now they don't have to pay the benefit. That's
yep,
kind of the insurance game. They hope that they never have to pay it out.
yep,
And we often find also that, people with long-term care policies are few and far between. And often, even if they do have them, they're usually insufficient to cover the full cost of care.
yeah,
And sometimes people will have, they'll have government benefits, whether it be, Medicaid or VA benefits or, any number of different programs that are available either federally or state by state. But in general, people are unprepared for how much it's going to cost. And that's a common thread. And that's usually when we get the call, is when that sandwich generation, the person like you or I, who's dealing with both our own children and our parents who are now in some version becoming our children to a degree. We're right in the middle of that and trying to, raise our kids, but also help our parents. And the other thread that we often see is that families don't always live in the same state. So it gets more
Oh,
complicated.
absolutely. And I'll tell you who it's really complicated for are the single child that's a male. If you have a son that's not living in the same state with their, because we know for the most part it's generally daughters step in first as a primary caregiver. But then if they just have a son, you better hope you want your daughter-in-law because that's going to be kind of the other person there. But when they live out of state, or that actually is really complicated because there's this emotional piece that is hard on them from being away from them, but they're kind of removed in a different way, and so it's really difficult. I worked with a family that was in a very similar situation. Um, Parents lived in the other state, the house that they grew up in. Dad was a retired vet. Mom was a stay-at-home homemaker. You know, they didn't want any help from anyone. They didn't talk to anyone about anything until the one day that they needed help. Dad did enjoy his glass of beer every night, maybe too much. So he fell, broke his hip. Mom had some early signs of cognitive decline, and son's living in another state, and he's starting to get phone calls from the hospital at 2 a.m. and they're saying, we don't think that this is a good situation to go back home with. And the last time their son was back home, kind of assessing the situation, it was kind of as it always had been, right? I mean, if they were operating, there was no sense of urgency to do anything. But in that moment, his whole world changed, and he had to rearrange his life in a way that he had never intended or expected, and it was a real challenge,
Yeah.
to do that from afar. So,
Yeah.
yeah,
I think we all know that at some point, assuming the relationship is as strong as we hope all of them are between the parents and the kids, the aging parents and the adult children, but you're not fully prepared for what it means to care for an aging adult. Just logistically, forget about the the money side of it, but just logistically, it's hard. It's hard emotionally and it's hard physically to be present and be there as often as you want to be. So it's definitely a challenge in so many ways, and that's where our products come in, is trying to help people have some peace of mind to be able to use the home. So if they've already burned through what they have in liquidity, again, oftentimes we see these house rich, cash poor clients where they don't have a lot of free flowing capital to be able to pay for these things, but they know they need the care and they think they can't pay for the care, but they've got a home that they lived in for 50 years that they bought for $20,000 that's now worth, who knows, a million, 2 million,
million, yeah,
5 million, who knows, but a lot more than 50,000 when they first bought it, and that's where we come in, and we provide an alternative to reverse mortgages, which definitely serve a purpose in some cases, but there's some downsides to those loans. But I think oftentimes when people think of aging adults and mortgage financing, they automatically default to a reverse mortgage. And there's some downsides if you want to transfer the property to heirs, if you decide you want to move into assisted living on any long-term basis, you can't keep that reverse mortgage. You have to pay it off, which means almost forces you to sell. But the worst thing people can do is as a senior is aging and getting toward the end of life is to sell the home. And the reason is if they've owned that home for years and years and years, there's probably a huge capital gains tax bill coming if they sell the home. So sometimes the products that we're using are not tax evasion, right? That's illegal, but just a tax strategy to avoid having the capital gains tax. I'll give you an example that we talk about often. There was a 97-year-old in the Los Angeles area who had bought her home for next to nothing, 40, 50 years ago. It was now worth $4 million.
Wow.
And her family needed to pay for care and probably didn't have proper advice. And so they sold the home. And she probably had, maybe a year left of life, give or take. You never know for sure, but roughly a year, let's say even 2 or 3 years, let's say, knock on wood, she made it to 100. When she sold her home, she basically wrote a check to the IRS for $1 million. Like there is no alternative. $1 million of your legacy is gone as a donation to the IRS and the government. Whereas if she had, in that case, financed some of the funds to help her pay for the care, and she had tons of equity in the house, she had no mortgage, so $4 million of equity to pull on. If she had used a loan to be able to buy her family more time and sold the property even the day after she passed away, all of those capital gains theoretically would be wiped out and never would have paid any of it. And now the family would have the $1 million rather than the IRS. So sometimes it's tax planning. And here's my official disclaimer: I'm not a CPA, so talk to your accountant about these things. But it's little details. I know when to raise a flag and say, hey, you need to check into this and talk to a professional. I wish we had gotten in touch with that person. This is actually another senior living professional that told us about this story after we were talking to them about the same issue. And I think that happens a lot, and people throw away money just assuming that's just a cost of doing business, so to speak. You have to sell your home to pay for care because you're out of capital or going to run out of capital fairly soon, and you end up losing so much of that equity to the IRS. So, what do you see on that end? Like when people are kind of getting to the end of their resources, you see people selling their homes. You see people. I mean, I'm sure it's a mix, but what do you typically
It,
see?
I think there's different buckets of people, but I think I'll just talk about this when we talk about life plan communities in general, because I think um, that's something that people generally think at certain income brackets that's not something that they could ever afford. And I
Hmm.
think what your product does is makes that not only an affordable model, but a sustainable model for them to live with lots of dignity and respect in a beautiful community with all of the services that they need in a way that they never could have imagined. So I think for like looking at that population and expanding, I mean, generally speaking, life plan communities, it's about 5% of the older population that can afford to move into one.
Hmm.
But using your model, you could probably expand that out and offer that, because when you move into a senior living community, you're not buying real estate. It's not a second property. It's not another home. You're buying a contract of housing plus healthcare in most cases. I mean, that's the benefit of moving into that. But you are not the owner of real estate. So your home is still your primary is your still your primary home theoretically, because you're not buying a second property. So being able to use whatever values in the home to help pay that monthly fee to live there, that to have that offset some of those expenses is incredible. And then also taking some of the equity to pay for an entrance fee from on the other side is makes it a really attractive model for people who wouldn't otherwise know that was available to them.
Right.
And so I think that what you're doing from that perspective is incredible, and especially in markets that have had real estate just kind of go wild, like in California.
Sure.
I'm in Phoenix. That is now the case because everyone from California wants to move here now. So our housing market has gone out of control as well. But I mean, there's a lot of markets in the United States that have seen that, where there's just tremendous value placed into the real estate, and they've never even considered it that way. And so, from a life plan community perspective, I think that's a wonderful tool to have to the toolkit.
Yeah.
And then if it's not a life plan, and let's just say it's gotten to this point, like it's just a memory issue, mom's not safe at home, you're not comfortable trying to staff the 24/7 situation at home. Oftentimes it takes a lot of family involvement. To your earlier point, the emotional side of that is also really hard, and sometimes it's easier to, and you feel better because mom or dad might feel more safe in an actual assisted living community. Maybe and if there is cognitive impairment in a memory support neighborhood, or maybe it's past all of that and they need to be in a skilled nursing facility. and then making the move into those communities to get the quality care and services that they need, being able to finance that without having to um, essentially spend down your entire life savings. And then you can keep some of that back with your family through your real estate, I think is a tremendous gift to families that they wouldn't otherwise know about. And I think knowing that these options are available, not in all 50 states, hopefully soon, but in some would make all the difference in the world.
Yeah, it allows people to age more comfortably if they're willing to use their house. And a lot of times, sometimes that family dynamic gets in the way because the adult children are already planning to take that home or sell it and keep it for the, and use the proceeds for themselves. And they're actually not comfortable with the senior using the house to get some leverage against it to pay for care. But that's a family dynamic that hopefully you're not dealing with, but that does come up,
It does.
where and maybe the adult child is actually even living in the house with the senior at that time. But that's one of the things about that's unique about our product is that unlike a reverse mortgage, you can move into a life plan community or assisted living or memory care, whatever it is, and still keep the loan. You don't have to. It's not a requirement that you have to actively be living in the home in order to get the mortgage and to keep it. So that's one of the challenges people often find with reverse mortgages is they want to take out a reverse mortgage to pay for assisted living. You can't really do that because then you're not living in the home anymore, unless there's if there's a spouse that's still staying at home, maybe. But one of the tactics that I don't think people use often enough, and you have to have the stomach for it as a family, but one thing you worry about is at some point you're going to run out of money, right? Or equity in your home or whatever. In many cases, people eventually, if seniors aging for longer these days and the cost of care certainly isn't going down. But people are concerned about running out of money. So one strategy we talked to people about that they could consider is maybe leveraging the house to pull out some of that equity, putting that money with a good financial advisor who will help that money grow and last longer and offset what you're getting in what you're paying in interest on the loan that you take out, but then also considering just to buy more time renting out the home to someone.
Yeah.
And now your renter is paying for your care as well as the money you just cashed out that's now growing in investments and compounding over time. You're basically maybe you couldn't afford it before, but now you can.
Yeah.
You create a whole nother stream of income. And the beauty of it is that if you can rent that property indefinitely, as long as you want to, you can have a property manager. I highly recommend it. Obviously, a senior in assisted living is not going to be the property manager for the home, but there are affordable property management services, and if anybody needs a referral, we can certainly provide those. But doing that, the beauty of it is that you can pay for care as long as you need it. You're not going to run out. Well, I mean, obviously some people run out, but in theory, you can pay for care for a much longer period of time if you take this strategy and also avoid that awful situation where you're quote unquote forced to sell the home to pay for care because you don't have access to the capital. If you have rental income coming in and investment income on top of that from the funds that we provide for the loan that you can slowly deplete, but you're not going to deplete all of it on day one. Obviously, it's going to stretch out over time. Now you've got the compounding gains of your investments that you don't have at the moment, but you get from the loan. You have the rental income, and that can help you afford the type of care that you need if you're coming up short on long-term care insurance or government benefits or whatever it may be. So it's just using the home in a way to allow seniors to age with dignity and comforts and things that we all want, and hopefully the family's supportive of that. But that's another strategy we've talked to people a lot about.
It is, and it's exciting because it's actually a real opportunity for them to be able to finance it without. I mean, I think as an adult child, many of them worry about like, how am I going to finance it? I'm going to have to pay for mom
Right.
or dad. I mean, that's ultimately, and they're like, how am I affording that on top of college and whatever? I mean, all the other expenses of running your own household, and so there's again back to that emotional piece that we kind of keep connecting through here that this provides a solution for kind of all of those things that are keeping people up at night. I mean, when they're worrying about how to do this. And so I think that conversation is important. I am curious. I think on the other side of that, and maybe you can talk to us about this, is um, because it's such a different strategy. It's new. It's not something, and particularly this older generation who may or may not trust it, and be worried about just the economy in general. I mean, how do you talk to them about that concern? Because I would think that some people might think, are you really, are you just trying to steal my money? Or, how do you help people kind of come to terms with this as a real solution?
Yeah, so we're big proponents of people having proper financial advisors. So we're not functioning in that space. We might make some suggestions, but we highly recommend that a family has a financial advisor to run these types of ideas by, because we can tell them, okay, here's how much you can take out, how much you can qualify for, and we have some really unique programs that underwrite based on the unique criteria of seniors who are, banks these days are very driven by income. Seniors are not working anymore. If they're moving into assisted living, they're not, they don't have a home office in the assisted living facility, right? So we're big proponents of people having proper financial advice, financial advisor, estate attorney, accountant, because they have a very unique say in how all this works. If it helps you avoid the capital gains tax, using that extreme example that we gave earlier of the 97-year-old woman, $1 million in taxes that were given away to pay for probably 1 year of care. Like that's very expensive care. And they did it, and she got the care she needed, but at a very significant expense. So usually what we find is that the people who are open to those types of ideas are those who are getting financial advice from professionals. So if they're not getting that, oftentimes they get scared by the idea, and it's not for everyone. Some people don't want to be a landlord. Some people don't care if they're going to pay capital gains tax. They just want to sever the relationship with the house, and they're not emotionally attached to it, and so they sell, and that's fine. Like that's the right choice for some families. But I think when you really look at the numbers and you can break it down, a financial advisor, a good one, will be able to tell you, okay, with the money you have right now, this is how long it's going to last you, and then what? And if you sell your home, this is how much it's going to cost you in taxes based on the market value. Maybe there's another solution. And listen, financial advisors never hesitate to get another, $500,000 into an investment account, or maybe more, who knows? But they can invest that money for you over time, and that again just lengthens the amount of time that you can cover the care, and increases the level of care that you can afford. So it's not right for every family, for sure. Not every family says yes to that idea, but it's another alternative, especially when you have a family who's going to need care for a long time. And we often talk about seniors and people who are aging and all these things, but there's also families who experience some sort of medical issue unexpectedly at a much younger age.
Yeah,
Uh,
no, thank you
Recent
for that.
case, 60-year-old had a major stroke and is going to need long-term care for probably 30 years, full-time care. Unexpected, out of the blue. How do you do that? Now you're talking about a very substantial expense, needing help with every basic function, and probably not able to live at home anymore because they can't afford the home care, which is usually the most expensive. But what do you do in that circumstance? It's usually that type of crisis where you're like, geez, I got to
Yeah.
figure this out. And that was one that we engaged with their financial advisor, even though they had some means. It certainly wasn't enough to last for 30 years of paying for care that they had never anticipated having to pay.
Right. And
So
I guess I think maybe for the industry too to understand this, I think industry providers, when you're looking at lifespan communities, assisted living, memory care, skilled nursing, I think probably there's an education maybe to help families who don't have financial planners, who don't have that team around them, because I think the solution is incredibly helpful for those families who haven't built that. That's not the way that their life is set up. So I think it's an important message for our industry to understand as a solution that's available to them as well. Because and being able to say, instead of saying this is what it costs, and then people saying sorry, I don't have that money. being able to educate the larger industry community to say, well, maybe, have we, there are some other interesting solutions here. Um, you know, we can't tell you if it's right for you, but before you say no, maybe you could talk to these people, um,
Yeah.
along the way, which, could potentially really be a helpful tool
Yeah.
in that tool.
Yeah, absolutely. And that's why we partner with all these different professionals. But also one of our responsibilities as we see it, or our job, is to educate the senior living professionals about these potential options because it's a when these things work out, it's so heartwarming to see how much it changes the seniors' lives. But so like that's what drives me every day to get the word out and talk about these new ideas and tell people you don't necessarily have to take a reverse mortgage. It may or may not be the right solution. Sometimes it is, sometimes it's not. Depends on what you want to do with the home and a number of other things. But just to have another alternative, or imagine, it's you or I, we're in the sandwich generation. Like, I can't pay for care for my parents and pay for my kids' school. And,
Right.
life is expensive already. I can't take that on, and finding ways to use the home to be able to do that can give families a huge sense of comfort. But our job, in part, and that's why we're on this podcast and engaging with people like you that have a voice within this space, is to get the word out there that there are alternatives, because our goal is to set a win-win-win, right? Of course, if we close a loan, we have revenue from that. Let's be honest, we're in business to to provide loans, but the family wins because now they have a plan for how to pay for care, and they had no idea how to do it before. The community that they're moving into is always looking to raise occupancy and fill the rooms that they have available to support seniors. And so it's a win for the senior. It's a win for the community that they're moving into that now has the revenue of not having an empty room. And we benefit obviously from doing those transactions. The only non-beneficiary, so to speak, is the IRS getting checks that they really shouldn't be getting because people don't know any better. And trust me, the IRS is not going to send that check back just because you made a bad decision. So that's why getting the proper advice and educating the senior living professionals, in my opinion, is so critical, because they're really the gatekeepers of this information. They're the ones where the seniors are coming and talking to them and saying, you know, I need care, but I don't know how to pay for it. And someone says, well, it costs this much. And they say, I can't do that. And then the panic starts to set in. There's more to that conversation now. If we're successful in our job of getting the word out to senior living professionals, that conversation will get a bit deeper. And there may be a suggestion of, hey, maybe talk to this group and see if they have a solution that might work for you. Do you have a financial advisor? Like, just getting in a little bit deeper and understanding the root of their concern, and maybe that there is a solution. They're just not seeing it because people don't see their house as an investment. This is what we're talking about at the very beginning. Come full circle. People don't look at it that way. They look at, oh, I want to leave the home to my family, to my kids or my grandkids. And they see it as a different type of investment. But it can and probably should be, in many cases, used to pay for care when the family doesn't have other means that can cover it. So that's our job. And I thank you so much for joining me today to help get this message out. It's so helpful to have people like you that are, you know, a face and name in the industry. And obviously, LeadingAge is one of the top advocacy groups for seniors, and we appreciate all you do there. And it's so important to get this information out there. I wish I could just click a button and everybody would know about it, but that's just not how the world works. So we do one podcast session at a time, trying to get information out there and inviting people like you to join us and talk about, these different approaches that people just they don't even know are an option. They don't know about the tax implications of selling the home as a senior is deteriorating in health. And we feel like it's our job to get that information out there. So, Jaime, I want to thank you so much for joining me today to talk about everything.
Thank you for having me. It's a great solution for families, and I'm glad that I can help share the news.
Absolutely. We hope people will spread the word. So if you want to find us, the best way to get more information about these types of things that we're talking about today, our website for professionals, not necessarily for the seniors directly, but for the professionals that support them, is financingforseniors.com. And Jaime, if people want to find you, what's the best way for them to find you?
ArizonaLeadingAge.org. So come find us, come check us out, or you can email me at jroberts@arizonaleadingage.org.
Amazing. Thank you, Jaime, so much. I appreciate your time, and we will definitely have you on again because I enjoy your energy and your insights, and you're a great guest. So thank you so much for joining me today.
All right. Be well. Take care. Okay.
All right, take care,
Bye.
and hope to see all of you on the next episode of On the Mark. Take care. Bye bye.